situation where we have Strike, Stride, and Strife, three publicly floating preferred stocks that are not dilutive to the equity. They all meet a different market requirement.
Right.
That $110 million of Bitcoin we bought last week, that was acquired without issuing any common stock. So what's going on here is that we're using our $60 billion of Bitcoin collateral to issue credit instruments. They never come due. There's no liquidation risk. There's not even an interest rate risk, right? It's a non-cumulative preferred, and we could suspend the dividends.
Right.
So at the end of the day, if he's lucky enough to short the stock below 1x NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out. Issue preferred shares that yield 10% and invested in Bitcoin, which has been going up 57% for the past 4.5 years. We're capturing the 47% arbitrage effectively risk-free for our common stock shareholders. And if you want to value the company, you have to value the company's ability to generate Bitcoin yield or Bitcoin gains over and above the actual holdings of the Bitcoin the company has.
So, as you said, you have about 60 billion, 63, 64 billion dollars worth of Bitcoin. Your company is worth about twice that at 106, 107 billion dollars in market cap. And you also have, obviously, an enterprise analytics software business. How do you break down the value of the rest of your company, ex Bitcoin holdings? Continue a price increase at these levels that we've seen? I mean, can it keep that up over the next 5 years, over the next 10 years? And at what point do we see, winter coming again? Because that's been a permanent fixture of this asset class, right? It's gone from 0 or 1,000 to 20, and then back down to 3 or 4, and then up to 50, and then back down to 15, and now up to 110. Like, when does it drop again?
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to 0, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bimmy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
Okay, so there's a few things to dig into there. One, that in your words, Bitcoin winter is not coming back. I'm rereading Game of Thrones right now, so that statement gives me the shivers. But I did want to go to the competitive landscape, if you can phrase it that way. And you went there naturally. You think about the ETF suites out there. IBIT, for example, already up to $72 billion in assets. There's a lot of Bitcoin treasury companies that have come to the scene. As you mentioned, 21 Capital comes to mind, started by Jack Mallers. And they all have the intention of just accumulating Bitcoin. That would be good for the price, Michael, as you...
Whenever we create a preferred stock, it has the Bitcoin performance, and it has a measure of Bitcoin performance and a fraction of Bitcoin volatility. That allows us to issue the most liquid preferred stocks in the world at the highest performance. Strike was up 29% when the rest of the market of preferreds was down 6%. Strife was up 22% when the rest of the market was down 4.6%. It's impossible to issue Bitcoin-backed convertible preferreds and Bitcoin-backed fixed preferreds unless you're willing to make 100% of your balance sheet Bitcoin. So I'm not really worried about competition from JP Morgan or Berkshire Hathaway. I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin and a short duration credit investor. What we sold with Strike, STRK, was a perpetual call option, good for 100 years or forever. And then we sold a perpetual dividend you could hold for 100 years and give to your grandkids. So long duration credit, long duration call. And that preferred never comes due for us. So we don't have liquidation risk. We don't have credit risk. So it's a much better instrument if you intend to invest in a volatile asset like Bitcoin and hold the investment forever. Now, the other point I'll make, Katie, is if you think about what we're competing against, there's like $80 billion worth of corporate credit and preferred equity-based ETFs, et cetera. So we're actually competing against that. We're offering tax-efficient, zero-fee fixed income yield to someone that wants to hold that in their portfolio.
Michael, I would, at least in the top 5 most important characteristics of Bitcoin is its security, right? I mean, scarcity has to be one near the top, and the ledger obviously was a genius move by Satoshi, but it seems to be uncrackable. And I'm wondering if that will hold true far into the future with the development of quantum computing. Do you worry about that?
I don't worry about it. And I make the point, Microsoft and Google market their quantum projects, but they would never sell a quantum computer that cracked cryptographic systems in the existing banking systems of the 20th century. They're going to want to move digital money at high frequency at the speed of light. That means digital assets like Bitcoin over the Lightning Network or via layer 3 protocols. The demand for digital capital, which is what Bitcoin is, and digital networks like Lightning and like all of the crypto protocols that are being worked on right now, it's going to go through the roof. So I think AI is really a demand driver for Bitcoin. It's going to accelerate the entire digital assets economy. And no, I'm not worried about the threat. The AIs can't crack, public-private key cryptography. What they can do is imitate you and talk you into doing something stupid if you're listening to them. And so they're a threat to all the other systems in the world, not to Bitcoin.
All right, Michael, we got to leave it there. It's always great to speak with you. Appreciate the time. That is Strategy co-founder and executive chairman, Michael Saylor. And tomorrow, don't miss an exclusive conversation with Jim Chanos right here on Bloomberg TV. That is at 12 p.m. Wall Street time. This is Bloomberg Crypto.
We really do think that major technology firms, major financial institutions, major commerce firms are going to go the stablecoin route. And we think that they're going to look to partner with the leading platforms and the leading infrastructure that can bring the technology, the scale, the network effects, and really the broad regulatory.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.